Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into Next Level Charting. Thank you very much for joining us. I appreciate it. If you're watching this video on YouTube, and you like it, of course, please give us a thumbs up and consider subscribing. Today, we're going to dive into the world of electronic payments, and we're going to do that with an ETF, IPAY. That is the Electronic Payments ETF. And this is part of a secular trend, a secular theme that I think is working out there in the stock market and will continue to work for the next several months, years perhaps. And so what we're going to do is we're going to look at the technical situation for the ETF itself. Then we're going to look at the top component stocks. And then I'm going to show you how to choose between Visa and Mastercard. They have similar charts, but how can we pick the one that is the strongest? Let's hit the charts. So we're going to first start off with a weekly chart just so you can see the long-term chart or performance for IPAY. And so this is a bar chart going about 3 years. And the 40-week moving average is there. So you can see starting out in 2018, we had a pretty sharp decline and then a rally to new highs in 2019, a normal garden variety correction there, a move to new highs into early 2020, and then the COVID crash there in February and March. And if you look at the bottom window, you can see IPAY was outperforming the S&P 500, SPDR, SPY into 2020, but took a harder hit and moved back into inline performance with the SPY ETF there, and then started outperforming again later in 2020 and into 2021. So it's outperforming SPY. That's what you want to see. If we look at the price chart here, we had this big surge off of the March lows, a little consolidation in June and a breakout, and then kind of a choppy consolidation in September, October. And that was, of course, when QQQ corrected and the S&P 500 corrected with a sideways choppy range. And then you can see IPAY surging and then consolidating. And this is a consolidation within an uptrend. And so it is a bullish continuation pattern. We've got a 2-week surge working, and a breakout there would argue for a continuation of the existing uptrend. So we're in an existing uptrend. So that's the first hurdle we want to see when we're looking at an ETF. Is the long-term trend up? If it's yes, we're going to move on to further analysis. So here is a daily chart. We'll get a little bit more in detail. And next, we're going to show a candlestick chart to get even more in detail on how we might want to approach this. But there we can see a little correction there in January. And, here's a support break and a gap down. Well, it didn't amount to much. And why is that? Because the bigger trend was up. You were above that rising 200-day moving average. And we're in a bull market. And you can see here back in October 2020 there, we had that support break and gap down. It did not amount to much either. And that's also because we were in a bull market and above the 200-day. So treat pullbacks as opportunities when you're in a bull market and the long-term trend for that particular ETF is up. So looking at recent price action, there's that triangle we saw on the weekly chart. And I've got a breakout within the triangle I want to show you as a way to get a jump on the triangle breakout. On the indicator windows, I've got full stochastic. It's Stoch close on StockCharts ACP. But it has been bullish for almost a year now. And when it's above 60, it turns bullish, and it stays that way until it moves below 40, which is the red line. And then RSI in the upper window for the indicators is used to identify oversold conditions when it moves below 50. So it's in that 30 to 50 zone. And you can see there were 3 oversold conditions in January, March, and late March, early April here. And once you get that oversold condition, then you're looking for some sort of short-term breakout or upside catalyst that we're going to see on the next chart. So here is an even more granular picture of IPAY here. This is a candlestick chart going over just a few months. So we know the long-term trend is up, and therefore we're looking for short-term bullish reversal patterns. We're ignoring bearish patterns and bearish setups because they are not worth your time when the long-term trend is up and you're in a bull market. So here we got RSI late January moving into that 30 to 50 zone, and then you can see that sharp decline with a gap down. Well, a few days later, we got a gap up and an island reversal. So that was a bullish signal there, short-term bullish signal to partake in a longer-term uptrend. And then I've got Stoch RSI in the bottom window, and you can see when it pops above 0.80, that means you've had some sort of RSI breakout or uptick, a momentum uptick, and that is a bullish catalyst as well. So we had this pullback again into early mid-March, and there you can see a big hammer and then a move higher to follow through on that hammer there. And we also got a Stoch RSI pop. Now, all breakouts, short-term breakouts, you get a little bit of noise, and here we got a pullback again. But then you can see we had started to find support near that prior low. We had a resistance level established with this high and that little dip, and then we got the breakout there 4 days ago, and we got a Stoch RSI pop. So that's why I like to look at 3 different time frames: long-term trend, what's the bias overall; medium-term trend, what is the pattern working, that was the triangle; and short-term trend, what do these candlesticks look like? And next I want to show you a chart that captures all 3 that I use on a regular basis. So here we are on trendinvestorpro.com, and we're on the main analysis page here for subscribers. I've always got these 2 links at the top here for the current market regime, bull market or bear market, and I've got the ranking trends and setups table for my core list of ETFs, which has over 100. And every Thursday, I put out a detailed ETF report for trends, patterns, and setups. And so here is this report from April 1st, a week ago. And I want to show you the chart that I showed for IPAY here. So this is a line dot chart. It just shows the closing prices here. And I'm moving to a bar chart on this one. But on the left, you can see we've got the long-term trend here, and we're above the rising 200-day, and Stoch closes bullish. And then we can see on the medium term, we have a falling channel. Now, if you look on the candlestick chart on the left, because of this spike on that hammer, it looks like a triangle pattern. Either way, it's a bullish continuation pattern. And so you've got an uptrend, you've got this bullish continuation pattern, and so now we're looking for that little upside catalyst. And I identified what I call the double W. And so you can see you have a decline, a bounce, a decline. At the low there, you're testing support. And if you get a breakout, that's a W, and that's a breakout, a W breakout. And then RSI is doing the same thing. It's got this W thing going. And if it breaks out, that's a momentum breakout there. And then if you look at the candlestick chart, there you can see we've got a test of support, and we've got a clear resistance level to watch short term, and a Stoch close indicator to watch as well. It hit 0.80 on that. So 0.81 would technically be a move above 0.80, but 0.8 is pretty close. And there's the breakout there. So this is the way to anticipate the breakout of the triangle by getting the breakout within the triangle, the pattern within the pattern. So looking at some of the top components for this ETF, here is Fidelity National Information Services. And this one's been sideways for a long time. And now it's breaking out, consolidating, and breaking out of a pennant-like flag thing and looking to continue higher. So it still looks positive. And next up, we have Fiserv, which is kind of doing the background work as far as electronic payments are concerned. And this one is strong as well. Got the big breakout in November, a deep pullback to the 200-day, then another breakout, a little flag working here, and working on a flag breakout. And then we look at Fleet Core Technologies. We can see it's been largely sideways, and there's a pullback, but it looks like we're breaking out here. Then we look at Global Payments, another one that was sideways for a long time, but then got a breakout. And this looks kind of like a cup with handle, which was popularized, of course, by William O'Neill of IBD. So that is a bullish pattern as well. Then we've got PayPal, and it just shot higher in mid-February, fell back to a support zone, is holding that support zone, and you can see that this is a big advance. It retraced around 2/3, found support, and now it looks like we're bouncing off support to continue higher. And next we have Square, and look at this move in Square. And this is just since the summer, May there, actually late spring. And then you have a move from 80 to 280. And I think this was also helped by the holdings in Bitcoin, because Square did buy a bunch of Bitcoin. They become early adopters. You can see this triangle consolidation and a breakout working there above the 200-day. So it is looking bullish as well. So here we have Visa, and I'm going to look at Mastercard next and then show you how to choose between the two. But the long-term trend is clearly up here for Visa. Here we can see a big inverse type head and shoulders pattern. It's not perfect, but no pattern is. But, clearly there's resistance, and you got a couple of challenges there. And then we get the breakout. Pretty hard throwback, but we're found support actually, and are already bouncing. So Visa is holding very strong. And then if we look at Mastercard, this looks similar in that you have a big resistance zone there, and you kind of have the left shoulder, the head, the right shoulder. This is not a picture perfect pattern. Maybe there's a downward sloping neckline, blah, blah, blah. I'm not very much into these kind of patterns. Here's more of a playable pullback for me. You have this falling flag to the 200-day, and then you break out. That is a good setup there. But anyhow, this is a bullish chart. The long-term trend is up. You got a big support zone here, and you're bouncing off of it. So they both look bullish. Well, how do we choose between the two? Well, you can put them on a chart here. So what I've got here is I've got a performance chart showing the percentage gain for Visa and Mastercard. And we can see Mastercard is the black line and Visa is the red line. And so, they were performing in line in the summer, but then Mastercard started to break away in the fall and here in the winter, and it is outperforming Visa. So by that metric, Mastercard will get the nod. And then you can do a ratio chart. These aren't as reliable long-term because you can see Mastercard's clearly up by more, but the ratio is still below this high. So I think that's a bit misleading in that regard. But you can see the ratio is rising. I prefer to put two performance lines instead of using ratio charts personally. So if you'd like to know more about trendinvestorpro.com, you can click on the link below in the description. Again, if you like this video, please give us a thumbs up and consider subscribing to StockCharts. Thanks again for tuning in. Have a great day, and I'll talk to you again next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.